World markets rally after last week's corrective action. Today, our futures are pointing higher. Will today's positive tone build? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are pointing to a higher open this morning after we saw world markets rally overnight. And so after last week's pullback, we'll be looking to see if the rally is back on today.
Well, I think today's action is going to be kind of critical, so to speak, because, last week you had Wednesday's outside day, which gave traders a little bit of an excuse to sell some stocks, gave some shorts an excuse to maybe get a little bit more short, and then on Thursday and Friday, we gapped down but held in there. So all in all, even with the world markets, Japan, which excited the entire world after a 50-plus rally or 50% plus rally from before December till now, a 10-12% decline from the peak to last week's low wasn't that big of a deal. So the question was, will it become a big deal? And as of right now, it seems like, same old, which is shallow retracements.
Well, so why don't you show us then the levels that you'll be watching today?
Okay, so if you look at the chart of the SPX last week, we talked about, pivot levels. If you remember, right around here, this was your first corrective pivot level since the start of the rally from the beginning of the year, that gap and go, and then when we crossed above 1474. So this was about 3.5% to the downside. Snapped back, held higher, and then when it took out this descending little channel, it was okay, rally back on. Then we did it again, okay? Remember, we rallied through 1576, and then we pushed as high as 1597. And this type of pullback was a little bit more fierce because it was like right around a key level. But what did it do? It held the 50-day moving average, snapped back, okay, held higher, and then continued. So this time we had an outside day. Let's take a very close look here just so you could see what levels you really need to watch. Okay, so this was when we pushed through this key area, which was what? 1674, did a fake out, closed in the lows. We then had a little bit of follow through to the downside. So with this 3.5% wide range, made some sense if you got short here when it came back below, if you had to stop at the high, to cover some. And then we talked about the 21-day moving average, which we held. So this was your accelerated trend line. So we need to see if it could contain the bounce. So what I would do is, which I think we listed last week, or we put in there, was put your Fibonacci retracement. Here is your Fibonacci retracement from this high to the low. So a bounce back, usually a weak bounce, would have been just to the 25.38. So now this is a little bit stronger. So if the bears have any control, they're not going to want the bulls to reclaim this 1667-ish, which is at 0.61 retracement, which is already probably a little bit more. So this morning, if someone got short here and added here, they're coming in and they're sweating a little bit today.
Well, we know Scott always talks about knowing your time frame, and last week, of course, you said, macro investors, don't worry, stay the course, and more intermediate investors, maybe take some risk off, get more tactical. So now, do you think we'll see traders try and sell the gap open? What do you think traders will look to do today?
Well, tactical guys, if just on that outside day, you got rid of your loose positions, which we said a lot should do, and got short, and used your tactics. The reason why last week I said, I don't think the highs of the year are in, because all those bears and all those fear mongers that come out after the first corrective activity, they start, saying the world's going to end, and then everyone starts to make adjustments perhaps to their longer term accounts. So by saying I don't think the high is in for those type of individuals, it will just stay the course, don't worry, get rid of the noise. For intermediate guys, if you did make some money on the outside day and cover it into the 21-day moving average, last week you had two type of setups. In active trading 101, even if you were flat, you buy it down open, and to see if it rallies back, and usually you sell an up opening. So if tactically you bought the down open and made some money buying the dip, the question now is, can you sell that rally today, an up open? Because it is a big travel range from Friday's, open to today's open. You probably have about 25 handles. So I think traders, if you're coming in flat, will be more, will probably try and fade this open versus chase it. So I would give it the first, 30 minutes, let it put in a pivot high and come off it. If you want to try and fade it versus that high, do so. But, we know Tuesdays, and I think they're going to try for 20 Tuesdays to have 20 plus Tuesdays in a row. They have a big promo schedule, so I would just be a bit careful here. This is tricky to see if today's a gap and go or if they try and fade it. I know that most guys probably will try and fade it a little bit, but just do it with a plan.
Well, and another thing to watch is the 21-day moving average. We talked about it over and over last week. Keep watching that 21-day as a key level of support, and most sectors did hold above the 21-day. So did you think this was relatively healthy behavior despite the pullback?
Yeah, well, last time we went all the way to the 50-day. So by holding the 21-day, that means we're even in a stronger environment from higher levels. So if they want this pivot type upper range to continue, the bears are going to have to sell this up open, and we're going to have to come way off the highs in order for them to say, oh, look, we have a lower high base versus 1687, which was, the high from last week. So that's their pitch right now is they need to fade this up open and have us close, I would say, at least 10 handles off today's morning high.
I mean, we can watch leading sectors like the financials for clues about the market direction today. The banks did pull in last week, but also held above the 21-day.
Yeah, so let's map out the same type of fib retracements for these key sectors. So if you look at the financials have continued to be strong. You look here, it came from the high here all the way down to a little bit above the 21 days, so that was even stronger. You want to do your Fibonacci retracement, you go from the high to all the way down to where we held the low. So right here, this is what needs to, the bears need to come in here and sell this, 20 area. Any close above 20, and the people who are looking to buy financials will be like, oh my goodness, I missed this dip down here into the 19s, so they start chasing it. So I would say right around, this 2001 is the line in the sand that the bears need to defend in order to keep this, or maybe have this mean something, which is the outside day, that came in right here. So write that down.
Well, let's keep doing that and check in on other sectors like the home builders, which saw relative strength on Thursday and then had a small inside day on Friday.
Yes, so this will be the same thing. So if you got out on the outside day or got short versus highs and said, okay, look at this big travel range from Wednesday into Thursday morning or Friday morning and covered, now you might say, oh, let me try and sell it again. So anyway, you look here, even though the bigger money has been buying these retracements versus looking to just short them for the Q trade, as this trend has been very strong to the upside. So if you look here, this is the same type of fib retracements. Here was right around your high, here is right around your low. So right around 32-ish, you could try and sell some, or at least if you bought in the hole and you want to take a little bit off and trim and trail it. So you're the guy who said, okay, I'm going to buy it around the 21-day because we haven't had this type of opportunity since since actually close to April. Then maybe trim some around 32 and see what goes on here. So write these levels down. This is why we put it up here. Here was your buy in the hole. Question is, will they sell some strength, or will there be appetite in this upper area?
And now what about the transports, which we know as one of the leading sectors this year, which did see some selling off on Friday, but held Thursday's lows?
Yep, I don't want to be this, a record here, but let's just stay with what we're doing. And what we're doing here is showing you how a lot of these groups held the 21-day. They did not fall apart. And now the question is, will they pay them? Will it be a gap and go, or will they kind of sell the strength? So if you look here, this didn't even have the strength actually to push through the highs like some of the other sectors. So maybe you go from here down to this zone. And you'll see that the 21-day, or not the 21-day, the 0.618% retracement comes in right around 115.66. So that is the level that they're going to want to contain this bounce in the transports if they want some kind of sideways and the hopes of lower action.
And the Russell as well found support at the 21-day on Thursday and continued to hold it on Friday.
Yep, and here we go again. Let's take it right to it. Let's go there. You will see that you had this very steep ascending channel that broke here to the downside, right when it pushed through this high here of what 99.60, when as high as 138, so, or 38 cents. This was your short entry if you were looking for it. So hopefully, if you did short, you covered some into the 21-day, because look what happened the last few times. That's where it held. So now the question is, will they sell this up open? I've never said that so far this morning. So anyway, here's the high, here's the low, and there's your 61% retracement. Like if this was feeble, this probably would not even gotten above here, this 0.38 or 0.50. It's already pushed probably. It's probably is where it is pre-market higher. Where the bear's like, oh my goodness, here we are, back to the drawing board. So right down 98, 94. If you shorted here, covered here, you have the luxury of trying again here, or if you bought here on the dip, take a little bit off right there, because there should be some resistance there.
All right, well, coming up, we're going to go in the trenches with high beta tech, which has been a mixed bag. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group, and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with high beta tech, which has been a bit of a mixed bag. On Friday, we saw Google shed over 1%. We've been talking about how extended this has been from its short-term moving averages, but it did close above the 21-day, so strength intact here, I would say, right?
Yeah, I'm a little, not upset, but whatever. I was like, you know what, we could probably see the 21-day in Google, and you don't get that kind of chance often to buy the leadership stocks, and I happened to be on the road Friday, so I did not buy this one back. But if you did, you know, it's up 8-9 points this morning, so you tactically re-entered. You know, this was your descending channel, you know, where we started. You know, it's, you know, a cent after earnings, which was right around this 800 and change. Had a big move up. Here was your flag type pattern that wound up failing, which gave you a move down to what? The 21-day moving average. So if you did tactically, if you got stopped out here around 905 and you said, okay, I'm going to buy it 30 points lower, congratulations, that's how you do it short-term tactically. So here, you know, you're going to see a little resistance probably at the 8-day. So, you know, if you have to know your time frame. If you bought it and you say, okay, I think Google's going to get to all those price targets of 1,000, you just got yourself a nice, you know, a nice entry. If you bought it for a tactical trade, saying, okay, from 920 down to 870, 50 points, I'm going to see what I could do here. So, you know, there you go. 884 is a level of resistance, and then, you know, I would say around 880, around 890. So this is, you know, your easy bounce. Okay, so it's well, never easy, but what I'm saying is, here's, you know, what you would call a quick bounce, and then anything over that, I think, you know, it'll be like game back on for Google. So at this particular point, you know, here's your resistance. You know, this is your playground from the 21-day to some this would be 1, 2, 3. Just write those down.
Yeah, that whole theme of holding the 21-day is going to come up a lot. We keep mentioning it, but it's still definitely coming into play, like in Netflix, which found support at its 21-day on Thursday and gained 1%, over 1% to the upside on Friday.
What a coinky thing.
Can you believe it?
Can you believe it? Oh my goodness. If you look here, though, this actually did something a little bit different because it held the 21-day on Thursday, okay, and then already started bouncing on Friday, so it showed you some relative strength. So that could have given, you know, some traders some clues to put this back into their, you know, intermediate portfolio if they, you know, sold here on this, you know, outside type day, which we haven't seen for a while right there. You know, this was your spot to re-enter, and then maybe you just stayed with it, and now the question is if it could close above its 8-day. So, you know, I think, you know, Google and Netflix have been best in breed, so I think people are going to be watching to see, can this close above the 8-day? If so, maybe Google can, but then your next resistance comes in right around here, which is closer to, you know, 235. So if you were playing for a feeble bounce or for some type of bounce, here's that area. If you know, shorted it here and said, oh, I'm going to cover it on the 21-day moving average, you have the luxury of retesting to short here for maybe a lower high. But, you know, that's basically what a lot of people are going to try and look to do in different spots over the next day or so. Right.
Well, and Apple started to look a little bit better last week. It showed some relative strength when the market was weaker. Do you think that the composure of Apple has changed at all, or is this just another case of it trading counter to the market?
Let's hope not. You know, when it doesn't go down, when the market goes down and builds a little bit of relative strength, you would hope that it's just not a program where, you know, when the spies go down, money hides in Apple. Right. And, you know, it has, ever since earnings, it started trading a little bit better. You know, and we've talked about this inverted head and shoulders pattern, which sometimes is a bottoming pattern. So at least you get points of reference to navigate it. You know, for me, I am long some Apple. You look here at the chart, you will see that, you know, obviously a huge move from 700 all the way down. Here is that, you know, 420 area that served as a nice little spot for us, you know, about a month ago to buy. Then it hit this, you know, 460-ish resistance, pulled back, retested, held that 420 area, bounced off, and now look how tight this is. So I would love to see a move above this 448, 449 with authority, with volume, and then I do think, you know, the next area that traders are going to be watching for a pivot is closer to 465. I know Citigroup, you know, had some cautionary comments, but you know, it's priced in a lot of cautious comments already. At this point, it's acting a little bit better. Let's see if we can close above this. If we can't, you know, then it's, you know, it's pretty much the same old Apple. Just try and do a little bit less and take very selective trades. But recently, you know, there's been that buy program in the first 15, 20 minutes that, you know, that's been pretty nice to navigate.
Right, yeah, you've mentioned that before. But then on the flip side, there's stocks like Amazon, which still seem to be stuck in a descending, at least intermediate descending channel. Do you think we should still be bracing for lower prices here?
Well, this one, it stopped midway through. It didn't get all the way to the bottom end. So we'll see if it turns higher. And, you know, this is the channel that, you know, it's been navigating for months now, okay, where every time it gets into the 270s, it sells off. This was the lower end. Remember, it got below the 200-day for 2 days, which was a trap bounce back. So now it held the mid end, you know, the mid area. So this time, you know, if the rally is back on in all the indices, you know, this is coming from higher. So just say a low, higher low. So next time it tries to get through this 270, maybe it'll have a little bit more strength to do so. So I'm not long Amazon. Little reversal on Friday. You know, I don't have a very good history with this stock, but at some point, if we get a nice tactical trade through 270 and we close above it, you know, from this level, maybe it'll be a little bit easier and more conducive for traders.
And also there's LinkedIn, which of course has lost some steam since missing earnings on May 2nd. Do you think that, first, what levels of support would you say that we should be watching? It's
slowly tweaked or grinded all the way back to pretty macro support. You know, you look here and you'll see there's been some trades since the last earnings. If you remember, it closed in the dead highs, and then the earnings were, you know, weren't blocked. They were good, but they weren't enough to sustain such a move like we've seen. And then you've had some minor trades along the way. The last one, giving you some clues that we could be heading back down, was, you know, pushed into this gap and then closed below it. Then you had this tight range where it broke below. So this is a big level for LinkedIn, especially for intermediate guys. If we were to get below 170 and close below it, you know, you could see a move down to this area, or maybe even retest this gap or the 200-day. But overall, you know, if you're a macro guy like we talked about, and you got involved in LinkedIn, you know, way back when with this nice cup and handle pattern, you're long it from the below 100. Maybe you take a little bit off. This is a pretty big monthly, you know, outside day, so to speak. So just, you know, take a little care here. Just don't fall asleep. But overall, you know, it's got a lot of prospects. It's innovative IPO, this and that, and it just takes, you know, this could take a little bit more time. And tactically, just use this 170-ish as your intermediate line in the sand.
All right, time for some quick hits. Definitely not losing steam is Tesla, which is still on fire. Shares gained almost 5% despite the weaker market on Friday.
Yes, you know, people who believe in this story that got involved a month or more than that ago, they've almost got a double or triple or even more. I know I was a little late. It's funny how I treated this thing. I was a little late to the move on it, and the first move I caught was actually from the short side. If you look at the chart here, that was on this exhaustion gap up. But then what happened? It held the 8-day. You know, this is when I kind of got out of it and then let it do its thing. It had a nice flag pattern and then ignited. So this could have been one entry right around this 90-ish area or at the red dog reversal. Then it was stronger on Friday in a weak market, and then it closed above the pivot of 97.12 or right around there, and now it's opening above 100. If you haven't been in Tesla or you have no longs, you know, it could be tough to initiate a new long above 100, even if you think in 3, 6, 9, 12 months it could be 150 plus, which I do think, you know, in 6 months to a year it could be 150 plus. But for me, tactically, on the third day, I am long some. I might trim some above 100, or even if I see some kind of reversal, get flat and just maneuver it again. But overall, this showed relative strength during the decline, played by the rules. And if you are a trader, get to know this stock, because when it moves quickly, and you know, it could be something that could, you know, benefit you in your trading career. Right.
Well, and on a very similar note, SolarCity also showing relative strength during the pullback. It gained over 4% on Friday and is on fire also.
Yep, and this one also perked up, and the two of them, even though they're in opposite sectors, they kind of moved together. So it's, you know, obviously the same gentleman behind it, which I'm going to let you do your own homework and find out who that is. You should know by now. If you look here at the chart, you know, look at this resistance right there. So, you know, we talk about key pivot levels. The question is, will it break above, you know, 52.77 and close above it with authority, or does it break above, you know, come back below and then, you know, give it a little bit of a break? Last time it, you know, crossed above a key area, it exploded, but now we're from a higher level. So, if you got long it on this reversal into the 8-day and you held it on Friday, always trim some a little bit into the up open and then just see if the gap holds.
And Goldman Sachs met some buyers on Friday. The stock gained almost 1% to the upside and got back above its 8-day. And being as the banks closed on highs, do you think we should have Goldman on our radar today for higher prices?
Yeah, this is something that I think could give us clues whether or not today's gap up in the financials and a lot of the indices hold, because it put in also an outside day, had a retracement to the 21-day. It's gapping up. So the question is, can it hold its gap up? You look at the chart here. This was, what was it, 2 weeks ago we talked about getting above 148 or above 150, and then you had this outside day here, which was a sell signal. This didn't even make it to the 21-day. Oh, look at that. I get to change my language. This only got to the 8-day, so that showed a lot of relative strength. So, it'll be interesting to see if they hold this gap up. Level of resistance here is 161.74, and then this high. So I would say if like all of a sudden in the next few sessions Goldman Sachs takes this out and closes above it, I think the banks are going to have another round of buying. Everyone started getting bullish, I think, a little late, and that's when it sold off a little bit. So here, use this as clues. I might even look to fade this gap up, but I'm going to do it versus a level, and I'm not going to have opinions here because this did hold above the 21-day and the 8, so that shows me more power than a lot of other things out there.
All right, and finally, metals are off a bit, but what are the levels you would watch in the GLD?
You have that double bottom at 130.50, and it's been a little erratic in this lower range. So I would think if the market does continue higher, maybe this double bottom doesn't hold. At this point, I have not really been trading these things because a lot of people, if they over trade them, they've been getting a little beat up. You look at the chart here, we talked about different time frames and different ways to make adjustments. Here was that pennant. Okay, you remember that? That was when some intermediate guys had to decide whether to get stopped out of their longs or get short. That was at 161. Then if you remember, this was your macro area. That was 148-ish, okay, which remember that Friday broke below. This was another area that if you've been holding it for a while, maybe you made adjustments. And now look where you're at. You have a double bottom in here, right around 130. But it's not really, showing much power here. So if you want to take a look at just this lower pivot, here's your major support right around 130.50. Here is some resistance. I guess if they sell the market on this strength today, maybe this could cross above 135-ish and retrace a little bit higher. But if we get a gap and go in the markets, this starts heading down. Make sure you have a stop in this, this area, which is around 130.50.
All right. So, what are your closing thoughts as we head into the first trading session of a shortened week this week?
You know what? I think that this range needs a little bit more time still. Traders were able to be rewarded by buying in the hole, in the dip. Now the question is, will they try and fade the open? And if they do, does it work? Or do they fade it and does it, squeeze and all of a sudden, get back into that grind, get back into that new high type of all-time high headline arena, which we were all getting a little bit frustrated from. I think that, again, your time frame is very important. If you're a macro investor, keep doing what you're doing. If you're an intermediate trader and you're caught a little flat-footed today where you said, okay, I'm going to go out flat over Memorial Day weekend, at least you're not short. So look at the bright side. If you did get into a few longs, like I have 3 longs, 1 short, because the market, kind of held in there on Thursday, Friday, maybe trim some, and then see what type of action you have today. Maybe you can fade the open versus a level and make some cash flow, and give this range some time to work itself out. And keep looking at the charts, keep looking at the moving averages, stop looking at the noise in the headlines, because the price action is telling you a lot more than, unfortunately, a few of the experts out there, including me sometimes.
Well, and with that said, happy trading, everyone. Have a great Tuesday.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.